Alrighty, traders. This is Blake Morrow. You are listening to the Morning Edge webinar. I hope everybody's having a great trading session. And you know, the jury's out here. I'll take you into some chart. Oh, obviously. Oh, that's it. We're done. That's it. We're finished this morning. I was like, hold on. I actually, you know what the thing is? I've got to make sure everybody's logging in this morning, and everybody's running a little late. I think they were listening to that interview of that gentleman, Eric, I believe his name was, and it was a really good interview. I listened to most of it. Um, and it seemed like it was pretty awesome. But I have a feeling like everybody had to run to the restroom, get their stuff together and then come back. So I'm gonna let everybody else trickle in. But when I say the jury's out, I think the jury's out as far as what the market does here. But what's interesting is like I said, we had good data. The market pushed to highs, and then we came back down again. And if we come down from here, again, that, like I said on the earlier FA.C.E webinar, was, people will blame it on strong data. It's going to make the Fed, it's going to have to make them do something. My buddy, we were just texting a little while ago, and he really thinks. And he's one of the smarter guys that I've known in my life. He's in commercial real estate, and he believes that inflation's really coming. With these retail sales numbers, and people are going to spend it's all the stuff we talk about. That we have all the stimulus coming. We didn't really need the stimulus, and now the stimulus is going to be spent on other things. Whether it's retail sales numbers, we're a big product of that. If you got your job and you still got a check, and you got this big check, you're like, oh well, I'm going to spend my money. I'm going to buy crypto. I'm going to buy some buy some new Nike shoes. I'm going to do all this other stuff, and it's bound to create some inflation, I would think. And so as a result, does the Fed have to respond to that? And what we've seen, and I'll say this again, is we see no evidence of a Fed that is hawkish in any way, shape, or form. The Fed chairman is about the biggest dove on the face of the planet, right? So Amanda just said in the chat room here, you guys got to hear this for those of you that don't trade, or don't trade. I'm sorry, not in the chat room. You guys are on, if you're not a premium and you're on light version, which is totally cool. I'm just telling you, this is interesting. She just said, I've had 2 moms today WhatsApp me about buying coins. That's scary, and I'm saying that not to demean Amanda, but she's a mother, and she's going to be talking to other moms. And so when you have the we always call it like the Japanese housewife, because of the big yen trade back in 2005. I want to say it was 2005. Let me go. I'm just going to pull up the euro yen for a reference point here. I want to say about 2005, roughly. Yeah, right here. 2000. I'm sorry, it's 2005, 6. This is when the differential in yields between the BOJ being at 0 and actually I should go back to the dollar yen to show you that. The BOJ and every other central bank was a massive carry trade, right? So the massive carry trade of yeah, back here 2000, I guess it was 2005 to 2007. It was all, we always called it, it was because of the Japanese housewives would be, you know, selling yen, buying everything else. So now it's the crypto type of thing, and you see this happen. I mean, that's why when you hear Steve or myself or Stelios really talk about this crypto craze, and you've got everybody buying it, we are getting close to an end. And I'm not saying that today is the end and this is where it all stops, but it is. I've seen it over and over again. And you know, you may be sitting there going, Blake, you know, what are you talking about? That's because I was trading it. You know, I remember this prior to the housing crash right here. So yeah, I guess it was 2005 to 2007. That's all it was. Is this is the carry trade phenomenon. You just bought every dip in dollar yen, euro yen, and the dollar yen was like worst of them all. The best of them all was the Aussie yen. Oh my gosh, this one right here, 2006 to 2007, you just bought it all, and then this is the housing crash, right? But man, this rally was just any dip you saw on any yen pair, you just bought it. It's kind of like what you're seeing in crypto. Any dip in crypto, you just bought it, right? And so that's what we're seeing here in you know, the crypto craze. It will end, and when it ends, it's going to be ugly, and there's just no getting around it, guys. It's not like the markets change. You know that what changes? The people in the market generationally. Like I can pretty much guarantee you the people that were trading currencies in that time are either dead or not trading currencies anymore. You know, they're trading. Maybe they're in real estate. Maybe they're in, you know, they're trading cryptos now. Maybe they moved into the stock market, but they forget. And that's and then a new generation of traders come in. That's why things happen in like a 20, 30-year cycle, typically. That's why, you know, we're back in this, you know, craze. It's just like the internet craze, and you know, it's the same thing. And it's not going to end pretty. People forget. People take too much leverage. They overextend themselves. They FOMO it. They YOLO it. You know, it's the same crap. But the point is, you don't know when it's going to end. You don't know when it's going to stop, and you just kind of got to go with it until it does. That's the flip side to it, right? So speaking of which, let's take a look in the S&P. So because I just said what I said, that means that the S&P here, we probably have to start looking at, you know, a move up to 4160 is possible, and support right now is 4111. Uh, 4110. I'm sorry. That's support. That's key. 4160 is resistance. And guess what? We're bullish. And you got to stay bullish. And unless you break below this trend line, then you got to go, okay, well, you know, maybe, and then we can actually drop that down a little bit. Okay. So resistance, support, right? All big levels. You stay bullish while you're in here. You get below that support, you gotta, you know, be a little careful, right? Let's go into the rest of the market. So here's the euro. So again, as I pointed out to you guys, the euro is actually trading not so well here. I want to say that 1990 is resistance, but I'm just going to write down 120 because it's the big fib, right? You know, I mean, excuse me one second. Sorry, I'm got to drink my coffee. Okay. So 120 is big resistance. Let's just put an asterisk there. While we're below it, you have to stay bearish. So that, if you're thinking in that terms, you got to sell euros on rallies here up into the 120 level. But we get much above 120, and it's hard to be bearish. You're probably going to have to go to range. The pound is still struggling at this 138. And that's got to get your attention, right? Simon said, "Keep it clean, Steve." 8-year-old listening. I'm not sure Simon, I have no idea what you're talking about. And I'm Blake, by the way, just in case you did not know that. 138. It is struggling here. So that's, like I said, it's got to at least get your attention, because when we can't rally in this environment, dollar can't weaken, you can't see the sterling's not around, that's now starting to put a risk on anybody who's long. And I don't have any pound dollar exposure right now, but I would be a little concerned if we can't break above this 138 level. So I'm going to write, oh shoot, what did I forget that with the euro? Did I even go into support? I didn't. Same as yesterday, 1920. Sorry. Excuse me, 138. Okay. Support for the cable. Okay. I had a question. Actually, I was talking to one of our listeners yesterday, Joshua. By the way, he's new to the community. And he was like, I'm still trying to understand, the bias chart. So for those of you that are fairly new, I want you to stop what you're doing and pay attention to this. So the bias chart, what we write out here is, support and resistance levels. These are levels based on, important technical levels that we see in the markets. Now, what do you do with this information? Well, first of all, let's say our bias is euro bearish, right? Just like it was yesterday. So, okay. So bearish 1990. So that means if we're bearish the euro, when it gets to resistance, you need to start thinking about A, possibly shorting it. B, if you're long and it's got a bearish bias and we get to 1990, you gotta start thinking, oh shoot, I know we're at resistance. We talked about it yesterday. So I need to make a decision here if I'm going to stay in it or not, right? And the bias, if we're going through this analysis and we have a bias and we say, okay, it's bearish, that doesn't mean you can't go long or you can't buy something. Like if it dips to 1920, you could buy it. But for me, if I identify the bias as being bearish, that means bearish is. Let me grab my pen really quick. I'm going to stop here and use a pen. So if I think that I'm going to draw the euro, like the euro's been doing that, and we're currently recovering, right? And this is like the resistance. Shoot, let me redraw that. I'm going to redraw that. Just give me a second. Okay, so this is the euro, right? It's been falling, and then recently we've recovered. And this is where we're currently at right now, and we know that this is like the 120 level. If I'm bearish and I think overall it's moving lower, then I'm going to be more apt to sell it at this resistance level here, right? Because I want it to go down. But that's not the only way you can make money when you're trading.
Ding, ding, ding. I'm just preempting the bell. Sorry.
Oh, thank you. All right, I'm gonna have to get going here in a second and get to the analysis. But let's say it's bouncing, and you're like, well, I want to be on the long side, but Blake identified it as being bearish. Well, that's fine. Be long, play it on the long side. That's okay. Just understand that if I'm seeing it in a bearish bias, I'm probably not the only one, right? So if I'm seeing it in a bearish bias and we've identified the trends being down and you went long, which may be counter trend, well, then just be really careful when we approach resistance. Know that this is pretty good resistance. That means you might have to sell it here and get, take some profits. And because I know, like yesterday we had Amanda, she would last 2 days, she's been long the euro, which is great because it's worked. Hold on, I'm trying to get rid of my there we go. She's been long the euro and it's been great. She bought it like I think down here around the 119 level and she was playing it to the long side. I'm just using her as an example just because she might be listening in right now. I know a lot of you are in the chat rooms. And that's been great. But knowing that resistance is right here, she's probably like, okay, I'm, going to refrain from taking some longs up here because I know we're right up against resistance. So the support and resistance levels of the bias chart really should help you know where, those key levels are at, where you have to be really, it might be an inflection point area. So hopefully that made sense. Okay. Anyway, all right, let's go back into analysis. I'm going to wrap this up to give Steve and Stelio some time to speak. All right, so support, if we're building like this little wedge, this little trend line comes in around 37.40. So if we dip here, you got to just be a little careful. We might find some support here at 137.40. I'm going to write that down. It's not giving us a lot of room because I really think that the real critical support is at 136.60, right? That's the big kahuna. That's the support down here. That's the double bottom. And we all know if that breaks, oh, there's going to be hell to pay. There's going to be some downside in equities there, or equities, downside in cable there. Aussie, 50% retracement has held, but we cannot rule out a move to the 78.16 level. And that's a big Fibonacci 618 golden fib. I think it's really important. I can't rule out a move to that. So, oh, dang it. Oh, no, there it is. Okay. 78.15. I know it's up there. And I sold some this morning of the Aussie at right here at 77.53. So, but I also know that we could go even further than that today. Okay. Support. Well, 77 cents is support intraday, but I'd give it all the way back down to 77.60 because remember, this was all really key resistance. So I think you'll find a lot of buyers down there. Okay. Kiwi. Oh, by the way, what are equities doing right at the get-go? Of course, we're pushing higher, right? Why wouldn't we? Dow pushed to new highs. Oh, we just hit the 161. Wait, hold on. Oh, that's an intraday one. I was thinking it was more important, but that's still pretty good. That's the last down move we saw on the Dow. We just hit the 161% extension today. Just should be noted. Like it had some unfinished business up there. Just hit it. Kiwi. So, 50% retracement at 72 cents. Support is now at 71 cents. So that's easy. So any dip down to 71 cents might find some buyers, and any rally at 70 to 72 cents may find some sellers. What I would prefer to do here, and I don't have any Kiwi exposure at the moment, I'd prefer to sell right there. But you could also buy it down here, right? Either or. Dollar Canadian. So the dollar Canadian dipped down to the and if you weren't around yesterday, you know, I got out of the dollar Canadian when it dropped down to 125.25. I did not buy it again overnight at 127.75. I want to, but didn't. But I'm still considering buying some dollar Canadian down here. 124.75. Resistance now is 125.33. Here's the way I would approach the dollar Canadian if you're not long, because this is how I'm thinking it right now. If it doesn't come back down here to 124.75, let's write down that 124. What I'm thinking is, if we get back above 125.30, I'm just going to get long, because then it's a false breakdown, right? False breakdown below the support here. Oh, shoot. False breakdown may lead to a breakout, right? So I'm going to try to play it on the long side if we squeeze back above 125.30. So I still think it's still trying to build out this inverted head and shoulder pattern. Okay. Dollar Swiss. You guys know that this is critical. You know, if it dips back down to 92 cents, which it might today, man, look at stocks are so strong. If it dips back to 92 cents, just get long here. You know, if you can get long down here, then you know you can put your stop right here. And if it does break down, then you know you get short, and then you put your stop right above here. So it's a good risk reward when you get to the 92 level. It's definitely a place where you can play it on either side, right? Depending on how you view the dollar Swiss, right? So anyway, all right, 91.90 is it. Resistance is going to be, I mean, I know we've been writing down 92.50, but this little support here, you can see support, resistance. I'm gonna write down this 92.75. I don't know if we're gonna get there, but, and I'm gonna keep us in range right now. Dollar yen, speaking of range, dollar yen's really trying to, we got below the 109 level. Getting below the 109 level in the dollar yen, I mean, I've actually traded on the short side twice since it broke through 109, both with very limited results. I think I made like a couple pips on one, and I made a couple pips on the other. That, you know, it's one of those, I'll get into it, and then it's like, okay, it's not even moving. So why am I getting in this trade right now? But I keep thinking, you know, as long as we're below 109 and 109.30, then the pressure is going to be on for a move down to 108.35, which is this horizontal support. You can see it right through here. We break through that, things are going to get kind of ugly quickly. So we'll write that down, 108.35, and then resistance 109.30, and I'm going to put us in range. Dollar index, look at how sloppy the last 2 days in trading have been. I mean, this is how sloppy the dollar has been. But you can also see that the downside momentum is starting to slow down. So that horizontal support right through there. Actually, let me just delete that. That horizontal support right through here comes in at 91.30. Resistance is going to be that breakdown point right here. That's support, support, support. So any move up here should have a issue. Okay. So if you want to be patient, just wait till the dollar index gets back to 92 and then sell some dollars when it gets up there. Like if you're that much of a dollar bear, just trade it like that, right? 92, 91.32. So I'm just writing down 91.30, 92. And guess what? I'm going to keep it in range. Dollar Mexican peso. Things trading heavy. It really is trading heavy here. We're in a wedge. And unfortunately, the wedge comes down to 1985, and the 161% extension here is 1985. So, or 1984. So what's happening with the 10-year? Let's take a look. Are we still falling? Because that's pretty ugly. Oh God. We're some really, really critical support. So bonds are going up one of two reasons. Well, actually, if they're going up in this environment, like the stock market's liking the fact that yields are going down. I mean, hey, they liked it when yields went up because the economy is growing. So if yields are going down and bonds are ripping, what does that mean? Does that mean the economy is on very shaky footing and investors are buying bonds, right now? And they're buying bonds for safety, and then you're seeing yields drop? Why are stocks up? Or should stocks be up? Should stocks reverse because yields are reversing? It's a really interesting here. I don't know. And I don't have the answer, guys. I'm just posing questions right now because it's hard to read when you're dealing with bonds and why bonds are doing what they're doing. Anyway, maybe Stelios or Steve have some better ideas here in a minute, and we'll talk about yields. But let's note that 1985 and resistance now would be 19 or 20. This resistance here, that's where the trend line's at, basically, is 2013. So oops. And I think I had this in bearish yesterday, and I think we have to continue to keep it bearish. Yep, sure did. I bought a little bit of USD South African Rand today, just so you guys know. Daily trend line. I was looking at a three drive to a low. 1, 2, 3, but I'm not really good at these. So, but I also thought that this trend line support should hold. So anyway, just letting you guys know, I bought some. It has nothing to do with our bias chart, but I did pick some up down here, but very small. And obviously we have to get back above 1440 in order for me to try to play it a little bit more aggressively. But I'm just letting you guys know what I did. Dollar yen. If you're in the chat room, but obviously not everybody's going to be in the chat room. Dollar yen, we talked about it. Let's go over to where am I at? Dollar Norway. So the US dollar Norwegian krona came down and stopped me out overnight, which really irritates me because this is really key support down here. But I had my stop below these lows because I thought we were playing more of a triangle, but really it's more of a range. look, this is not a bad place to be long the US dollar, Norwegian krona. I'm not convinced that I want to get long just yet again, but 835 is support and resistance right now. Because I still think that this is an accumulation phase, but it's, you know, if stocks continue to go up every day, I mean, it just, they go up every day, guys. So US dollar, Norwegian krona has to get back above 843 for me to be convinced that these lows are in. And look, if we get above 843, and if like I'm waiting, but if we get back above here, then we could probably trade it back to the upper end of the range. So if you trade it from 843 back up to, like, let's say 850, 855, you don't have to get the whole kahuna. You could just, you know, take a few bites out of that little trend higher if you want to. Gold, silver, Bitcoin. Okay. Gold's creeping up to that resistance, 1760 and change. So let's see. You guys know I've been looking at 1765, but put in 1765 since we're getting close. I'm not going to put it in as bearish anymore. I think we're in a range. So, and that's obviously important resistance. If we break above 1765, gold does turn bullish. And we should make a move for 1840. Because a double bottom complete like that, right? So okay. Support 1720. I think that's what we had written down yesterday, and I still think that that's the case. Silver, I'm equally unexcited about silver. 2685, 2385, and wake me up when we get out of this range. I'm sorry, I know it's around this, something like that. Just wake me up when we get out of this range. Bitcoin, last but not least, 67,000. Look at how we've really held that pretty well here. So, and I tried to short it yesterday and then just stopped out at break even, basically. 68,000. Channel supports it. 58,000 support here. I'm actually going to write down 61,000. So 58K. That is the major support. Then you have 61K. Then over here, 68K. And yes, we're bullish. Okay. So your bias chart's finished. Now, Steven Stelios will be popping in here because I want to ask him, what's up with the yields? What's up with the yields?
That's a good question, Blake.
Yeah,
like
what's up with the
before,
yields?
Yields going higher, the economy is doing better, yields going higher, and equity is going higher. Then the economy is doing worse, going
yeah,
lower.
We had this strong data, right? Super strong data today, and yields come down. So what the hell is happening? And is it happening because people are worried that the Fed is going to start cutting rates?
I
mean,
honestly don't
where
know.
are we
I
gonna
really don't know.
go? I, I
I hate
mean,
to sound like a broken record, but I see no indication that the economy is doing better in comparison to the money that's been thrown to it. We still see extremely high unemployment claims. And yeah, of course, some sectors will be quote unquote booming if we're running 660 billion deficits per month. Yeah, absolutely. But what kind of economic growth are we going to have in comparison to the increase in debt of the year? I mean, if you have a 10% deficit and you manage to have a 5% recovery from a year like last year, is that actual growth? But
yeah,
coming back to the
but I
question
hear
of
what you're,
yields,
I hear
I
what you're
have no idea. Nothing makes sense anymore. This relentless bid in equities, nothing. Nobody cares. Everybody is happy to pile on the same stocks that have been valued to the sky, and yields fluctuating, but equities losing their correlation with them uh, as needed so they can maintain going higher. So when yields are moving higher, equities are moving higher. When yields are moving lower, equities decouple from the usual correlation and they keep moving higher again. I mean, nothing makes sense because
yeah, exactly.
I
So
doubt
I
this is
mean,
very much of a market anymore. You know what I mean?
right, and I mean
There's
even
no price discovery. It's not that people sell to each other and freely determine the price of assets.
yeah, equities decoupled from are decoupled from currencies for the most part. Now the bond market's decoupled from equities. I mean, what's next? Is it
Yeah, I
just
mean,
all? Is it just all crypto and equities? Is that it? Is that
But
the
it
most
has
important
been for
thing?
the past few months. Yeah.
I can't answer that question. What I can tell you is that this market environment is beyond annoying. You know
And
what I mean?
and like you said, it rewards bad behavior. That's what gets me.
Oh, Charles said, check support on the Aussie. You know what? I actually mistyped it. This I have to fix this. This is 77.15 and this is 76.60. Sorry. Thank you very much. I'm sorry. That was I actually had the Aussie numbers off. So wait, no, that's wait, hold on. No. Shoot, sorry guys. Let me just double check something. Charles wrote in, so no, 78.16 and 76.60. Okay, so yeah, I guess that whoops. Dang it. 78.15 and 76.60. Okay, so that should be correct. All right.
Okay,
Just
I'm correcting it on the site.
thank you, Stelios. Yeah, so anyway, Steve, yeah, I mean, I hear what you're saying. Everything is really just decoupled and it doesn't make nothing makes sense. So, given the fact that nothing makes sense, what do we do with that? Yeah. Buy Bitcoin?
As I've said before, I was showing it again yesterday. I believe the dollar is breaking down again, and they have no reason not to trust this. Aussie has
Yeah.
broken higher. Copper is breaking higher today. Um, I believe that as long as this environment remains what it is, there is no possibility for the dollar to get a recovery, a proper recovery. We like it or not, makes sense or not, it is what it is. I mean, you can have a relentless bid in risk assets and the dollar rallying with them at the same time.
Yeah.
Not when the fundamentals of the US are what they are. I mean, you could, in theory, have both of them happening, but that would imply that the US fiscal position would be improving, not worsening.
Yeah.
It's the
That
dollar smile theory. When
yeah,
the
that
US is
makes
doing better than the rest of the world, the dollar is moving higher with risk assets, but that's not the case.
yeah. So as we say pretty much every day, as long as stocks continue to go up, we should see the dollar continue to be soft and trade soft.
Yeah.
So what I'm hoping for is, I was talking with a trader yesterday, and we were talking about euro dollar implied volatility again, and dollar yen implied volatility. And this is 1 month, at the money volatility. It's going to be, they're both at 5.5%, and that is historically very low volatility for currencies, and it's brutal when it's that way, because that means we're basically not really moving a whole lot. And it also means when you find yourself in a profitable position, like let's say I'm just going to use this as an example. You bought the dollar Canadian this morning, and you got it below 125, and you get up towards resistance at 125.30. You probably want to look to take profits, because volatility is really low. So therefore, we're not going to have massive amounts of moves up and down. So if you get a move higher in that environment, take your profits and move along. So just some food for thought. Anyway, Irina said, Blake, it's buy the rumor, sell the news. First quarter 2021 will be disappointing quarter over quarter. Yeah, I mean, it may be, but I'm just going to have to. I personally think that the U.S. economy, and I agree with Steve, is probably not on real stable footing. It is a fake economy. It is definitely stimulated, and that's the thing that's keeping us afloat. But will it be enough to turn the real economy around? And that's questionable. We'll see. But Steve, I'm going to let you guys take over, you and Stelios, and I'm going to sneeze. Hold on. I'm going to sneeze. Hold on.
Bless you.
Bless you.
Thank you. I hit my mute button just in time. Didn't blow your speakers out. I'm going to let you guys take over. Wish me luck. I still have my appointment for my Johnson & Johnson COVID vaccine today. They sent me a text, so
if they don't give you the vaccine, make sure you buy a shampoo.
What's that?
Get a shampoo if they don't have the vaccine.
Get you some what?
No, get a shampoo.
Yeah.
Why shampoo?
Oh, buy
Johnson
shampoo.
and Johnson makes several.
Oh yeah, got it. Yes, I gotcha. Oh, your Greek humor. It's like you add Greek humor with being a dad, and you got bad dad Greek humor, which is just,
oh my god.
Yeah,
lethal.
that's you. That's
almost
you.
lethal.
All right, guys. Hey, good luck today. I'll see the rest of you guys on in the chat room or on the daily roundup in a few hours. So talk to you soon.
Thank you,
mate.
Blake.
Blake.
All right. So what is there to say that we didn't say on FA.C.E? Not much. We got some US data, retail sales, obviously. Philly Fed, a lot stronger than expected. New York Empire State Manufacturing, again, a lot stronger than expected. Who cares? So, the interesting thing, like Blake said, is yields, and the reaction to yields, basically 10 years now below 160, and it's threatening to go. Remember, we're talking about 150 being the breakout point, 150 or roughly there. Well, what happens if we go back below? And this has been like a false break. That would be technically quite bad.
We still have a possible ascending wedge here in play.
Yeah.
Although admittedly, so far the move out of the ascending wedge completely lacks momentum.
Yeah, it's sideways. Yeah.
Yeah, it is more sideways than anything else. And you know something? So far, equities don't care.
Yeah. Well, when did they care about anything?
Yeah, lately, no, they haven't cared about anything. Yeah. What I can tell you as a fact, I stressed that out yesterday in things that I'm paying attention to, is that, in my opinion, the Aussie has broken higher. Not a coincidence that we've seen the exact same move here in copper, right?
Well, there is a big correlation, right? Australia, yeah, of course. And copper, yeah.
Huge. So copper was, in essence, pointing to higher prices. I mean, this was a textbook symmetrical triangle. Let me see, we just got some data. US business inventories as expected.
As expected, yeah. The
And
rest we had before.
housing market as expected as well, so no event.
Yeah.
So copper breaking higher, Aussie breaking higher, Kiwi breaking higher. I said that this might have also been a more sharp corrective move, and how would I know? Because I was following this channel. If we held the channel's resistance and turned lower, it would indicate that there is more downside. If we break through the channel, so we show momentum that deviates from what you would expect from a corrective move, then the chances increase that Kiwi might have also bottomed, despite being the weakest. The USD NOK, where is it? Where are you hiding?
Big support.
Here it is. Toying around with this support and looking really heavy, while at the same time, crude oil has had a strong move higher, which increases the likelihood that the actual formation here was that the whole move was a triangle and not the last part. So now the chances have substantially increased that we're not going to see a lower low. Now, I say substantially because there is still a little bit of a chance that something like this channel is in place, but we really need to hold this resistance area at 63. So theoretically speaking, as long as we hold 63, there is a chance to turn lower again. But as I said, this type of price action is now telling me that there is a much higher chance that we've probably concluded a corrective move here as well, and perhaps we're headed towards 70. So no matter what I look at, I more or less get the same feeling that this ascending wedge in the S&P might even break to the upside and create some kind of a parabolic move out of it, as we've seen sometimes happen in the past. So this environment with the relentless being in equities has two ways of getting resolved. One of them is getting a rejection from this confluence of resistances and finally seeing a proper corrective move lower. But there is the other alternative, which we've seen in the past in very frothy eras. I remind you, specifically, this one was, very similar, which peaked at January of 2018. We were monitoring this appreciation for quite some time. We went out of this channel and then we started creating steeper and steeper formations as equities had really gone parabolic. And the resolution was a move from 2,800 to 2,500 within a matter of like a week. So this is the alternative scenario here, right? That we're going to go parabolic out of this move and squeeze everybody that might be short out, and then see some very sharp move lower. So the more the days pass and we don't see a pullback, the higher the likelihood that we can see something like this unfold in the market. So keep that in mind. I mean,
Blasphemy,
yeah.
Steve. What are you talking about?
Steve, can you please look at FTCV on NQ? Yeah, sure. Copper. Okay, I just covered copper. Let's see this. FTCV. Let's see. What's this? This is newly. The problem with this is that there is not enough price action to do any real technical analysis. But with this limited price action, I would have to say, we seem to be oscillating in some kind of a triangle here. So if you're asking me if I would be short or long, the answer is neither. I would do nothing with it. I think it's still probably it's a newly added company. it's still in the first phase after an IPO that, you usually get a very volatile phase. I would be very hesitant in participating in anything like that, personally. Speaking of the Nasdaq, by the way, the Nasdaq did close to all-time highs the day before yesterday. Yesterday, it more or less paired the gains of the day before. So far today, it seems to be doing the exact opposite. For the time being, this looks to me like another bullish consolidation. I mean, we've spent like 2.5 days oscillating here near the highs. I don't see anything bearish. So I would assume that, there's more upside towards 14,372 is the next technical resistance, the 127% extension of this pullback. DAX consolidating at all-time highs as well. So, even European equities look good. The FTSE has broken out of this triangle. That's definitely a bullish development. Here is the Australian index that, after a period of consolidation in what was clearly a corrective formation, has broken out and is pushing the all-time highs. I think we can be there in a matter of a few days at 7.2 K. So, no matter what you look at, here's the IWM that if this is the interpretation that this is a triangle, it might be about to break higher as well. Although it remains weaker in comparison to other major indices. Here is the cable even closer to resistance. Here's the euro closer to resistance, and I wanted to focus today on some of the crosses because if you remember, I had warned about it. I said in advance that I expect these to be corrective consolidations in euro Aussie and euro Kiwi, etc. And I think that seems to be the case. Big rejection from there. Look at euro Kiwi specifically. A perfect channel to the upside. We're testing support as we speak. I mean, I don't think there's anybody that can see this type of price action and say, oh yeah, this was an impulsive move higher. I think this is, clearly corrective move higher. If you look at the pound crosses as well, here is pound Aussie. Keep in mind here in the pound Aussie that we have this long-term ascending trend line support. I think that eventually we're going to break below it, and that's going to be a very, very big bearish development, right? And here is pound Kiwi. So, these pairs can't really find their footing as long as equities are so well bid because, they have a very, very strong correlation, inverse correlation with risk. So, it was already kind of surprising that, exactly like the dollar, they were managing to somewhat recover despite risk assets being very well bid. But I think it's time for gravity to pull them lower unless we see some risk of coming through the markets, which, as I said, I mean, so far I don't see any indication of something like that being, around the corner. You never know, but, currently, definitely not any strong indications about it. Any questions? I think I more or less covered the things I wanted to say. So if you have any more questions, I would be happy to cover them. Otherwise, we call it a day.
Okay, bro.
Okay, Stan.
Thanks, everybody.
So,
Thank you,
see you all
Steve.
tomorrow. Last day of the week.
Take care.
Bye-bye.
Bye.